Hello guys, welcome to another daily market review. Sorry for this video being late. I was running a couple errands. I just made home, so my apologies. So here, no news Monday. We had a kind of like a trending day. Price did what it was supposed to do. It took the sell side on the higher time frame, the hourly and the 4-hourly chart. Nasdaq took the sell side. ES hasn't done that yet. And it formed after the V-shaped reversal, the first S&T divergence, which is the high of the morning session. Now let's dive in to what happened intraday. Let's take a look at the 1-minute chart. So hold on, actually, let me do this. Is the low before. You know what? I'll do it on the 1-minute. It's the same thing, anyways. Okay. New York session. Where are you? Okay, right here. So here at New York Open, to pull up ES as well. 1 second. Bear with me here, guys. That's Friday's price action. Okay, this is Monday's price action. Alright, cool. Let's just price side. So because the market has to form a S&P averages after a V-shaped reversal, this is the buy side. This is why I put TS there, which stands for turtle soup. So at the market open, initially it rallied, but ES was kind of stand still. Nasdaq was moving, so here it moved initially 56 points and then came down 100 points and then moved higher one more time 128 points. This is dangerous. This is basically seek and destroy, okay? Because what happens here is price goes for the buy side, then comes for the sell side, then goes for the buy side again. Okay, this is a seek and destroy profile. So but what happened initially was there's a 1-minute V-shaped reversal before market opened. Okay, and at market open here it was at fair value gap and it formed a bullish S&P divergence right here. Okay, and that divergence, this is the scalping model, took the original consolidation, so the 1-minute market maker pie model was completed here. Okay, and then at the same time, ES was not doing anything, pretty much nothing. So here it formed a sell model, sharp reversal again. This time this is the sell side. So you can look at the dealing range of that sell side. Here, this is the last premium fair value gap. 8 IFEDs goes for the high probability sell side, then takes out the external and runs for the sell side liquidity one more time. Now after that sell side rally, here what it formed was a rejection in a V-shaped form again. Okay, this is fast market. So in that rejection, V-shape, there's a breaker here, rallied. As you can see, there is no bullish S&T formation. Initially, it didn't form. Here, though, this is the first S&T divergence in the bullish fair value gap. Takes out the short-term sell side, and then almost immediately after goes for that sell side, which is changing the state of delivery or market structure shift, whatever you call it. Now, if you want to target, you can trade the buy side here as a scalp as well as you can trade the sell side delivery too. Here's how you do it: you long the S&T, take partial at the short-term buy side, or collapse the trade, set stop and loss at break even. And if you wish to take the sell side, here's the dealing range on the short-term basis. Touches the range EQ right there, times the sell side, and that's another scalp if you wish. Now here though, what happened afterwards is, so it displaced with the sell side delivery. So here's a displacement. This is a premium displacement because there's a displacement right there. We're looking for this external range low, and the dealing range is right here. So premium fair value gap, this is a short entry. I believe it didn't form, oh, it also formed a divergence there as well. So this is S&T divergence, broke down, range EQ was broken. Now this is the premium fair value gap. Here I'll annotate the premium portion of it only. And the market literally just went for the premium fair value gap and sold off, tagged the sell side here. Now, here's what happened afterwards. I think anything happened afterwards is more important because that was low resistance run afterwards. So here we have, I'm going to delete the premium fair value gap, this delivery, so I already talked about it. We have the morning session low, AM low, okay, and then we have, this is the AM high. Because the market sentiment is short-term bearish, we're not looking for a delivery towards AM high. Whatever buy model forms in discount here, you have to be looking at range EQ delivery, basically a pullback, okay? So let me annotate this S&T divergence. This is an S&T in the form of equal lows, equal highs. There's another one here. So we're looking for those, okay? So here, V-shaped reversal. This is the first S&T divergence. Sends price towards where? Range EQ. Range EQ of what? Range EQ of the morning session. Why is it going for the range EQ of the morning session? Because, here's why. Let me delete that for a second. Or let's keep it, actually. AM session range EQ, okay? I'm going to keep this in red so we can talk about it a little more. So the reason I was looking at this range instead of this range, as I always do, or even like here or here, is mainly because, as you can see, this is a very important point in my opinion. So take notes. V-shaped reversal. Range EQ is touched here of this range, okay? But it just formed a buy model here, okay? The S&T divergence after a V-shaped reversal in a fair value gap, that's the initiation of the buy model, which means market will pull back deeper than it should. So for that, what are we looking for? If it's going to go deeper, we're looking for the previous leg's range equilibrium. So this is the previous range. It doesn't have to be AM session or PM session range. It's the previous day, previous leg. Okay, that's what we're looking for. If it didn't form a buy model here, yes, this would have been a short and it would have ran for the buy side, but it didn't. Okay, that's why I was looking for the AM session range. Okay, everything is algorithmic here, guys. So S&T, this is a long if you want to take it as a scalp. The target would be here. You would either collapse your trade or take partials, and stop loss would be at break even. And you can see the reaction of the AM session range EQ. It just touched there, and immediately after it displaced lower, tag this sell side. As you can see, here's the sell side. Now the sell side is gone. This is also the short-term range equilibrium if you want to look at it that way. So this could be bullish and tag the buy side, and this could be second leg. However, one thing, okay, the sell side was taken already. Okay, so that's kind of changing the state of delivery. One, the overall market sentiment is bearish, so sell side. So if you were looking for its second leg, you would be going against the order flow. Here, range EQ couldn't deliver buy side, which indicates weakness. Then it was consolidating, basically not doing much. Here, when I posted my chart, I was like, okay, this looks like it's the second leg for what? Market maker sell model. Why? Because market was unwilling to go towards buy side. Okay, that's why. From range EQ, before breaking down like this, it should have taken out the buy side, and it did not. So here it should have taken out, it didn't, which means even range EQ couldn't send it towards buy side. So that's weakness, okay? So here it was consolidating, basically not doing much during lunch hour, all the way to the end here. This is the first displacement, okay? I'm not sure if it formed a S&T though. Yeah, I don't see any S&Ts there. Could be somewhere here though, but that's not my point of interest. So break below the first fair value gap, formed an OB. You can also use the order block here. This is the first bearish S&T divergence. You can also turtle soup that high as it forms the divergence. Actually, that is not, 1 second. I thought there was a S&T there. My bad. That's not an S&T divergence, guys. But that's short-term dealing range premium fair value gap, basically. If you're bearish, you can use that fair value gap. So here it broke down with the hourly open. Here's the hourly open, manipulation higher, and that's a turtle soup, I think. I think there was an S&T somewhere here, if I'm not mistaken. No, I'm wrong about this. So came down to second leg range sell side here. Okay, broke more. Then it was drawn all the way down here, but it rejected it. So V-shaped reversal, same deal. Where is the reversal here? It formed a bullish S&T at the lows. This is not a V-shape, my bad. Traditional small money reversal. Fair value gap. Where is this market maker buy model is targeting, guys? That's an important question, I think. So basically, it's going for the dealing range equilibrium. Okay. So two things. If it forms one or two or more legs in the buy model, it's going to be pulling back deeper. Okay. If it's a deep pullback, you can use the old dealing range, like AM session range here. Okay. This indicates we are in a deep pullback. Okay. If it's not a deep pullback, what's gonna happen is the buy model will target this range EQ right here, and it's gonna be content with that. As you can see, rejected over there. Let me delete all this. I like to have a clean chart. Range EQ, buy model is completed now. Okay, so here is the important part. If you're long in the buy model, it is not going to stop, okay, until it goes for premium. Okay, all these fair value gaps are valid fair value gaps. There's no such thing as invalid fair value gap. There's such things as premium fair value gap and discount fair value gap. And if you're long, in premium fair value gap, that is an invalid fair value gap for me. Okay, so the buy model is completed at the range EQ. It also diverged there, if I'm not mistaken. Yes. So there's the S&T divergence. Now at this point, we're expecting a low resistance run all the way down to the drawn liquidity because there's a smart money reversal almost immediately formed after range equilibrium. Broke down, no displacement, kind of like chopped here a little bit, which is pretty normal. There's a high resistance area here. Okay, it's having a hard time breaking below, but the sentiment doesn't change with every bullish candle. In fact, it means market is forming order block. That's how you should see the up close candles like this one. So here it broke down the first displacement. This is a short. IFED'd. I went for the buy side, sell side rather. You can also look at that dealing range as well to get a better short in these displacements. So here you can use this range, and you can try to find a short somewhere in here, because that's the premium. Okay, if it goes more than that, if you didn't execute, you should let it go for a healthy run. So here, as you can see, range EQ bonds, range was broken, premium fair value at the last one, strong reaction, IFED'd, and sold off. Okay, so here is today's price action, pretty clean and interesting to watch because it was a no news Monday, so it was interesting for me. to watch this, but it was pretty clean. Every move had had a purpose basically. So tomorrow, let's take a look at tomorrow real quick. I'm not sure if tomorrow will be high probability, honestly. I think it'll, so I'm going to skip NASDAQ here. I think it'll depend on ES. So here ES is much stronger than NASDAQ. Now, what will be defining for the market tomorrow or this week in general is how ES goes for the sell side, or is it going to be willing? Is it going to be willing to go down here or not? Okay. And if it does, obviously Nasdaq will go lower. And for targets, we can be looking at maybe the fair value gaps here, you know, just to be content with it. We're already in discount at this point. It's just starting a sell model, but we're already in a discount. So be mindful about shorts here. It could tag these lows though, but we'll see. We'll go step by step again. The most important thing for this week, moving further, is how ES will be willing to go towards the sell side here. Okay. As of now, it looks like it is going to rate that level, which is 5,462. This is the low-hanging fruit objective. Now it's a breaker block. Okay. Now this is a breaker block. There is a fair value gap here, and this is the first time it's breaking the range EQ right here. So that means it should respect these PDRAs below range EQ. Otherwise, it will be choppy. If it goes here, it will be choppy and everything changes. Okay. I want to see respecting the fair value gap here, forming an order block, and keep going. So basically, I want to see the breaker being respected here on ES. Okay, if it doesn't respect that, everything will be more complicated. Other than that, if it stays like this, we're looking for the sell side delivery, meaning more room available for NASDAQ to go lower. So yeah, we could tag these lows actually. It could be, this is a bigger discount, but like, it seems like that could be the very good market maker sell model, you know, like this, consolidate here and then rally. We'll see. We'll go step by step anyways. We are day traders. We're not swinging anything. So yeah, thanks for watching this, guys. I'll see you and talk to you tomorrow in the live stream. Have a great day. Have a great evening.